Per usual, everything on this channel is for educational purposes only, and it's not intended as financial advice. So I had a bit of a move on the old Bitcoin today. One thing to always keep in mind is the rotation factor. If you have higher caps or lower caps that haven't moved, whereas the entire other market has moved, there's almost always rotation from one to the other, unless it's a broad pullback. In general, everything pulls back together, but moves bullishly, sort of independently. You can look at correlations for that as well. You can look at ETH BTC. That's a big one people point to, specifically skew. So when you're seeing things like ETH move and BTC consolidating, the assumption is, for me, that there should be a bullish move to follow. And when I looked at the chart, we had this ascending triangle. And the only thing you really need to know about chart patterns is if you've got a horizontal, price is going to want to cross that horizontal. If this was a descending triangle, then it goes down. If it's ascending, it goes up. The other big thing is I immediately see this volume. And when it's a descending volume profile, that's a big, big clue that we're building to something, usually a chart pattern. For days and days and days, this kind of looked like a giant jumbly mess. Then you see the volume, then you see this that's loose, but there. You're like, okay, I can see this ascending triangle. I can see it's got wicks all over the place. It's got these zones of support and resistance. The very last caution I had with this was typically these patterns break out before they're 3/4 complete. So you never want to see a pattern go to the very edge before completion. Typically not a sign that you're going to get the expected move. So we had to move this morning in US time, US hours, whatever. And it went the way it should have went. It hit 12.4 a little bit. It's retracing to 12.3 or lower now, but this does look fine for a bit of a continued move up. 13K is the real resistance here. This is a yearly pivot. So the consolidation pattern target plus the yearly pivot is telling me 13K is going to be a big zone. Either we tap 12.8 to 13 and reject strongly, or we reconsolidate up in the 12.4, 12.8 area to push through 13. Pretty much everything here has a bear div on it. So when I see a bear div price pushing into a yearly pivot, I'm not super optimistic. We're just going to zoom through that. Usually that's a stronger rejection and not consolidation. Usually it just, it's like a plane going up and up and up, and then you stall out on the yearly pivot and you get a stronger rejection. Plenty of volume support here. Tons of volume support at 9K. I don't think we go that low, but just something to keep in mind. Always watching the cloud. Like I said in the last video, most videos is the Bible. And again, this entry, this TK recross above the cloud, it's no surprise we keep going because that's what the cloud is telling you should happen. Right now, we are trying to print a C-clamp. We haven't yet. It looked much worse before today, which was one reason. And again, I was like, I had some trepidation about this ascending triangle. If you dial this back a day and you look at this C-clamp starting to form, it says be careful here. It doesn't say like, this is probably going to pull back. The probably going to pull back scenario is when this C-clamp is flat for a while. Then you start to get more convinced that we're probably going to roll over back to the mean reversion territory of the Kijun and not continuation territory. So you can even see here, we were building this C-clamp stuff not necessarily convincingly. Like it wasn't growing in the C-clamp, but it did have to pull back, regather itself, reconsolidate, and then you get your TK recross. So we're still bullish. I still like 13. I think everything looks fine. You can see the bear div though here on the volume and the RSI. And pretty much everything, like I said, has a bear div. There was also a B-band squeeze and breakout. Again, if you don't like cloud, fine. There's other ways you can assess the situation. We had this historic squeeze in mid-July, broke up. B-bands exploded, reconsolidated. And leading into this move, we had a historic squeeze as well. Not quite as strong and long as this, but historically quite tight for BTC. The other thing I'll say is when you get these patterns of 20-day duration, they're usually money. This will vary from coin to coin, but for BTC, it loves its 20-day plus patterns. 20 to 60 days is usually the sweet spot. So if you get head and shoulders, inverted head and shoulders, Adam and Eve, cup and handle, anything that's 20 days with this descending volume profile, for me, that's a really strong pattern to trade. If you look at this weekly cloud, something I'll be talking about for the next 2 years probably, is how this looks. And it's the most bullish it's looked since 2016. Like, it doesn't get more bullish than this on the weekly perspective. The only caution here is the trajectory will not be just straight to 30. That's just not how it's going to be. It's going to be messy. There's going to be pullbacks to the Kijun, the Cloud. These are all possible retrace targets. Those are all huge buy the dip opportunities for me because of the mean reversion play. Again, this is just charts 101. We push up, we push down. There's always going to be a mean. Price is going to always want to return to that mean. The farther we go up, the farther we go down. Similar to here, it's the same story over and over again. It's just a matter of how soon we get there, which side of the trade you're on when it happens, that sort of thing. But if you go into this knowing that, okay, we're bullish, yes, I shouldn't be mega short pretty much ever at this point, from this point forward. Will shorts be profitable? Sure. Will longs be more profitable? Probably. Where are my dip buying opportunities? 9.5, 8.5. I don't know if we ever get that low, but if we do, those are the levels based on the Kijun, based on the Cloud. These are all mean reversion targets. But all in all, you're looking for a multi-year bull run. That's what you expect here based on the Cloud. We've read this book before. We've seen this movie before. This is the 2016-17 playbook all over again. Here's the MA multipliers if you're lacking conviction still. So this green line is the 730 MA. It's the 2-year MA. And this red line is 5 times the 730 MA. And the only reason I love this is because it's so clean, right? Like, it captures the bottoms. It captures the highs. It tells you where to buy, tells you where to sell. That's exactly what you want to see from any indicator. So it's great. It's 10 years now. This is the BLX. This is on TradingView. The ticker is BLX. So anybody can pull this up. But the highs for this are 39. This is going to keep going up just like it did 2016, 2017. Again, reminiscent of that. The midline here is the white line. Really, it's not ultra convincing that it's headed for 5 times the 2-year MA until it's above the median. You can see we're a bit of ways away from that. So all of this to me says there's tons of upside potential. The expectation is that it keeps going, at least to this midline. For me, the expectation is not that it's going to retest support at this point. So that's 7.5. Midline's basically all-time high, 18K, something like that. If we talk about futures for a little bit, there was some chatter about from Skew specifically about contango or futures premiums. People can argue with me about percentage versus flat values, but this turquoise stuff is the futures premium on OKEX quarterly. Green is the weekly. So you can see here, as price goes up, premium should go up. That's just what you see contango in general. Usually, if the move is real, you'll see a premium. Now, if you see what we saw in April 2016, which is we got further into backwardation as we went up, backwardation. That's generally just more fuel. Once the move is decided and people keep shorting, that's usually just more fuel for continuation. So we're getting the expected healthy premium here. I think it's not completely overblown. You can see where the premiums were at this level. So they're about the same percentages here. You're looking at 600, $800, somewhere in there as like the be careful. Just an external sign that market's a little too hot. It's going to need some pullback. Cash and carry is viable. Shorting gets viable, et cetera, et cetera, et cetera. The obvious caveat is, if we're in bubble territory, this dollar value can go way up. I don't know what the percentage is here, but that's where it's worth looking at the percentage versus the dollar value. But just looking at this across the board, at 10 to 13K, the premium I think right now is fine. Weekly premium is fine. There's nothing here that says it's insane. Something else you can look at is the funding. Funding is definitely rising on the futures exchanges, derivatives exchanges. It's not completely crazy. And then something else I'm not good at looking at is options markets. I just don't have a good handle on that as far as what most of that means. But things you'd be looking for there are where the strike prices are at based on volume. For ETH, there was a big one at 400. We passed that. So just stuff to consider. Something else I'm always looking at is the Tether price. If in general, since March, if Tether's above $1, we're bullish, and Tether's held above $1, that may suggest demand. We're also seeing printing of USDC, TUSD, we had a 200 million USDT print today. Binance volumes are nearing November 2017, December 2017 volumes. We're seeing on-chain volume nearing all-time highs for BTC and ETH. So all of this is adding up to activity, lots and lots of new people, lots and lots of trading, which is bullish. Big volumes are generally bullish. And then back to futures real quick because I messed up the chart order. This is the CME futures contracts. And again, August 28th is the big day. It's usually a couple days before that. You can just sort of eyeball this, but usually a couple days before that, we have some volatility, in one direction or the other. And a couple days after that, we have some volatility. So just keep that in mind. August 28th into September, early September, probably going to see some volatility. Now, if I have to move all these lines up, I'm going to be sad because I do all this manually and that'll take some time. But hey, we'll be at 14K plus at that point. So I can't be too angry. But I'd expect volatility to all these rollover periods. All right, switching gears to ETH. Here's a better example of the C-clamp. You can see it's growing. It's not flat though. This will keep growing. It will then flatten out, and that's your cue for, okay, it's time to dump the long. It's time to potentially go short, at the very least, get hedged. We're not quite there yet. This can grow and grow and grow, then it'll flatten out. You can see here, definite bear div on volume, definite bear div on RSI. So this is for sure overextended. No surprises. Another thing to watch for here is the Doji Party diamond top. I forget the exact name of the pattern, but it's like doji, which these candles are. So a third day of just indecision is usually reversal potential. Weekly ETH cloud, again, 460, 750, Bitfinex, any various exchange you want to look at. One thing I actually forgot about was, just like 6,200 on the way up for BTC, this whole time I was talking about and thinking about, there's going to be a lot of resistance at 350. There's going to be a lot of resistance at 400. Look at all these wicks we had. Resistance, support, resistance. And none of that mattered at all. It just went straight through. So people love to use their horizontals, but always be cautious that sometimes it just doesn't matter, and we're in that phase of the market where prior resistance doesn't really matter. And a lot of this is due, I think, to the just DeFi stuff, lockup, and supply getting soaked up for anything other than being on the sell side of the book. And BTC is a part of that as well. Zach Val is talking about wrapped BTC has exceeded the daily issuance or weekly issuance for for BTC. So anytime you're getting a higher demand, then selling pressure, price should go up. That's just the expectation. So Sedge is still good. Everything still looks fine. 750 isn't as crazy as it sounded a few months ago. To think we were at below $100, ETH was potentially a failed experiment earlier this year, and all of a sudden we're at multi-year highs, right? Kind of weird, but that's the way crypto goes. So 460, 750, like I keep saying, that's not going to change target wise. This is definitely getting a little hot on the weekly. You can see how far away it is from the Kijun. There's no TK disequilibrium. I mean, this was probably the most epic TK disequilibrium you're going to see. Just a sign that this thing can widen out really far before mean reverting, right? And the same thing goes for the bullish side. This can just get completely blown out before mean reverting. But it's just something to keep in mind. The farther we go up, the higher the probability that we're going to want to mean revert sooner rather than later. This is ETH's version of the MA multiplier. I adjusted it slightly, so it's the 1 year instead of the 2 year, and then it's 3x the 1 year instead of 5x the 1 year. Not as clean, not as perfect, because it doesn't get you out at the highs. It doesn't really tell you the lows. I mean, it highlighted the lows, but it's not like super clean. So one way to actually trade this would be to sell when it crosses the red, the multiplier for the second time, and then buy when it crosses the multiplier for the second time. In any case, 700 is the minimum expectation at this point. You can see it's at the midline for the second time, just like 2019. So if this gets rejected at the midline, I would expect this to return to the midline or the 1 year MA at that point. But it's a little too early to tell what exactly is going to happen here. Having a pretty big bear div into the midline isn't exactly optimistic, but it's got time. And here's ETH BTC. This is the 2-day chart. Talked about this for a few weeks now, but it had this, consolidation, bullish 5200, which was actually the 100-400 on the daily, and hit the pivot, broke resistance on VPVR. It's got bear div here on volume and RSI. I expect it to retest the R2 at around 05 eventually. I don't think it's going to be now. I think it's a little hot. Needs some chill. Needs some pullback here. This may just pull back, go sideways, pattern out, make something. I don't know, some sort of triangle, and then attempt to break this pivot. But as long as it can consolidate at or above the pivot, it should be fine. It's got a lot of volume here, so it should be fine long term. And again, just like that ETUSD cloud on the weekly, upside targets 05, 07. Don't sound too crazy now, do they? Edge to edge, still active. We're pretty far away from the Kijun, but on the weekly, this can get completely blown out pretty easily. So it's all the same principles, regardless of the ticker, regardless of your thoughts on ETH or Bitcoin or DeFi. It's all the same stuff. Looking at Link, MA multiplier, this is a USD chart. This looks super clean to me as far as buy zone, sell zone. We're in the sell zone. I don't know what to tell you. Sorry, Marines. You heard it from me. I hate to be the guy, but doesn't look great for continuation here. Now this can go to 350,000, but it's eventually going to want to pull back to the midline at the very least. But I wouldn't expect this to go mega farther than it already is. It's a very similar situation to 2019. RSI is completely blown out into the stratosphere here. There's no div though. There's no bear div on this, oddly enough. There was a bear div here, clearly. Higher highs, lower highs on RSI. I'm not a buyer up here. You can't be, right? Like, look at how blown out this is. It is above 3x the 1 year MA. So that's that. And the BTC pair is even more ridiculous. Definitely a bear div here on RSI. Just insanity past the R5 pivot, past the beautiful Pitchfork, Chad fork that's been here with us since 2019. Midlines at 65k sats, 200 EMAs at 65k sats. I would love for this to Eiffel Tower back to 65k, attempt another high, fail, make a head and shoulders, and then dump. I mean, that would just be beautiful. I don't think that's going to happen, but something to always keep in the back of your mind is when you get half formation of any pattern, in this case, the head and shoulders, just, think about it, watch for it. It doesn't mean short the farm, but it says keep that in the back of your mind in case we do get back down to 65. People start relonging, get optimistic, get back to 001, sell off again to 65. That's a ways away from now, but something to keep in mind. So if we just check out Tezos real quick, back to this rotation thing where if one coin hasn't moved, if Link is mooning and Tezos and ETH and BTC haven't moved, there's usually going to be rotation. There isn't usually bullishness in a single coin and not the entire market eventually. So you had this cup and handle or whatever you want to call it pattern with a projected move between 4.3 and 5. You have your yearly pivot here at around 4.6. So I'd love to see this at least test the zone again. We'll see if we get that. I don't think there's any mega concern that this is going to retrace back to 320. You can even see a Adam and Eve here on low time frames. There's chart patterns everywhere, folks. Everywhere you look. It's not pareidolia, I swear. So if you're getting repeated bullish continuation patterns or reversal patterns, you shouldn't be shorting that. This doesn't really look like anything right now to me, but the expectation is that we eventually test 450 to 5, somewhere in there. And if we look at the Tezos BTC Pitchfork, definitely bear div again, just like bear div everywhere, pretty much. So no shocker there. And this range is huge, and it's been a year. Well, not a year, 8 months, let's say. So it loves this range, so it may just continue ranging indefinitely. It's going to take something. But Pitchfork says it's back to the median line, midline. Should be good to go for just ranging here. If it can break this high, obviously it's money, but right now your expectation has to be it's just going to keep ranging. It's bear diving, it's at the midline. There's no real strong impetus for bullish continuation here. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.